Hey guys, and welcome to Shay'S. I just did a video 20 minutes long and the sound was dreadful. I know this won't be much better, but I thought I would just try and condense what I just said into a new video so that it didn't have the crackling on it, because Jesus man, I'm trying to watch a video and it's got crackling on it for no good reason. Come on. Who's this? This is the mastermind behind Shay'S. This is Ara. Ara, meet the world. Meet the world. Yeah, she's gorgeous. So, I was saying in my video about what I'd learned in the last 4 months, but it isn't 4 months, it's flipping 6 months since my stroke. About 5 months since I started these videos, and I've been switching over to AI, which has gone okay. You know, I've had loads of views, and I've been having some really interesting content. I know a lot of people just see AI videos and they turn them off because they don't like them. Cheap, cheerful, this, that and the other, but a lot of time was spent making them. I really enjoyed sorting the scripts out, and if you actually watch those AI videos, the content's really good. They talk about all the top stocks, they talk about what's going on in the world, and they make sense of it in very short, concise 2-minute videos. So, you know, if you do want to watch them, go back over. They are relevant, they do help you make stock decisions, and I enjoy making them. So they are there for you if you have a couple of minutes to kill. But what have I learned in the last 5 months? Well, I've learned a lot. Yeah, financially, we are down a little bit. Ondas has gone down by about 150 quid. Not worried in the slightest. You know, sometimes you invest, that's a long-term 12 to 24-month project investing. I've learned not to worry about it. The dips, the dives, the geopolitical news, the noise, basically. Ignore the noise because you're investing. You're not swing trading, you're not looking at the ups and downs, you're not looking at the headlines. I have decided to have a chunk of the money, half the money, sitting in a long-term stock. Well, all of it, really. Ondas has got half, and then the other half is sitting in Amazon. Now, the reason I picked Amazon is because it's investing hugely in AI, which is only going to pay back over the long run. It's getting, stock price is getting hit because of it. It'd be like me saying, right, I'm starting my own business, guys, and I've just chucked £1,000 into developing my ideas and growing my business, and you'd be thinking, geez, that's really good. He's obviously going places because he's investing money. He's not just sitting back and trying to get by for free. But when Amazon says they're going to invest $200 billion over the next year in AI because they believe it's going to make them money, and then the stock market goes, well, hang on a minute, that's a lot of money. What if it doesn't work out? Well, that's very glass half empty, isn't it, guys? The pure fact of the matter is they're not stupid. They've built a $4 trillion company, I think something like that. Not by luck, but by judgment. And if they think they could spend $200 billion on AI because they're going to make $1 trillion off it, then that sounds pretty bloody smart to me. Not only that, but when you hit the 200-day moving average line, which they have done now, it was around 197 when we bought in. In history, throughout history, you can't ignore history when you look at the stocks. It tends to bounce off that line and potentially even double over the next 12 to 24 months. I'm not expecting a double up. I'm actually looking to sell at $250 when it bounces back to what it's been sitting at for quite a long time. So yeah, we have a plan in place. In terms of what lessons I've learned personally, there are certain stocks, instead of having 50 on my watch list like I have been, I've learned nothing from 45 of those stocks. But if I just had Nvidia and just had Nebius and just had Ondas and what's the other one? Oh, God, my mate's going to kill me. He's invested like half his portfolio in this one. I can't remember the name of it because I said Ondas and it's very close to that. Just bear with me a minute. Okay, it's come to me. Iron. It's not really close to Ondas, but my head mixed it up because that's what it does. You know, if I just had those Iron, Nebius, Coinbase, Amazon, Nvidia on my stock list and nothing else, I'd have probably made about double my money by now. With these very simple rules, guys. So rule number one, don't freak out. You know, don't have a plan and stick to it. Now that plan is now this. 1, stick to the plan. 2, every time Nvidia hits 180 or below, you buy it. You stick all your money in it. And then every time it hits 190 plus, you sell it. It's happened about 6 times in the last 5 months or so. So more than once a month, this swing happens. You're talking 30 shares with the amount of money we have in, at least. $10 profit per share every swing. So $300 swings times 5, $1,500. So there you go. I would have made $1,500 if I'd simply done Nvidia, buy at 180, sell at 200, sell at 190. It's even been above 200 at one point, so I could have made more than that. That very simple rule would have made me an absolute killing. Didn't know, wasn't aware. It's taken me 4 months to learn. I'm giving you that tidbit for free. So take it, put it in your pocket. Keep an eye on Nvidia. They are hugely successful. They're not going anywhere. They are hated by the market, by retail. They have an over 80% share of institutional investors. And that it means it gets manipulated a lot. So take advantage of that fact. Forget the news, listen to the smart money and the manipulation and do what they do. Buy low, sell high. 180, 190. Boom. Profit, profit, profit. And I swear, I look back, there's no way that could fail. So that's rule number 2. 1, have a plan. Rule number 2, I'm just going to go get a cup of tea before I do rule number 3, but rule number 2, Nvidia, buy at 180, sell at 190. Obviously there's wriggle room there. That means if you buy at 180 and it goes to 172, you don't freak out and sell. You hold it till it goes back up to 190. It might just take a little bit longer, but we're only talking a week longer or 2 weeks longer. There's such movement on that stock. It's crazy, and I think that's going to continue to happen. So next thing you do, if you've got a spare grand or whatever, stick it on Nvidia at 180, sell at 190, and like and subscribe to this video for more tidbits like that, because I'm making you money here for free, hand over fist. Right, I'll be back in a minute for point 3. Okay, I got my drink. Right, rule number 3, the big movers. The stocks that move all over the place. And we're looking at AI infrastructure. So Nebius first, $107 at its peak, I think, 104 at the moment. That went all the way down to $70. So if you don't want to swing trade Nvidia like every couple of weeks, then just take that one trade on Nebius next time it goes down to 70. Buy it and hold it till it goes over 100 and sell it. You've made a chunk of cash again. So Nebius, great. Iron, the same. It's been as low as 32. Generally sits at over 40. When it goes to 32 again, load the boat. And even if it goes down to 28, 25, don't worry, don't freak, don't sell. Wait for it to go to 40 again and sell and make your profit and take your profit. It's so simple, guys. And I wish I wish I'd gone back and done it. I'm not massively down, you know, I'm up a bit and I'm down a bit, and it's all good, and I've learned loads, and I know that over the next 6 to 12 months I'm going to make lots of money off this market because I've learned. So there you go, 3 big movers. 4, ignore the noise, ignore the market. The whole stock market is market manipulation. I'm telling you that clear as day. Last year in 2025, when the market wanted to move up and everybody decided it was a great year for the market, no one could do anything wrong. Whatever you bought went up. You could buy anything and make money. Everyone was a genius. Mistakes got overlooked, and it just was what it was. That was 2025. 26 has been different. It's been a red year. They wanted it to go down, and I called this, if you look back over one of these chatty videos towards the start, I said that they were going to deliberately crash the market And why were they going to do that? Because the midterms at the end of this year, and Trump wants a really good run. So he's going to upset everybody now. Gone into Venezuela, got loads of oil. He's going into Iran, get loads of oil. Rock the stock market. And he's going to bring all those resources in. And the stock market's going to shoot up. And Trump's going to be a genius. And it's going to play into his hands. And it's all by design. So I wasn't surprised it happened. This coming Monday, because of the Iran war kicking off yesterday, there should be maybe a 5% dip on the market on Monday. Maybe it'll take the whole week for it to go down 5%, but it'll probably take a rocking next week. And who cares? If you got in at your 200-day moving averages, you're probably well up, and you can afford for it to drop down without freaking out and selling. If you didn't and you bought high, well, yeah, maybe it's a time to get out and watch the market and sit back, and it's going to go down. Tech stock, growth stocks are all going to go down because it's geopolitical mess. Every conflict has been the same for the last 20 years. 5% dive, and then a couple of months of sort of relative stability, and then 20% increase every single time. It's going to happen again this time. But this increase would be more than 20%, it'd be more like 30%. Why? Because the midterms, and Trump wanted to look fantastically smart. And everybody wants to look like, the Americans made great choices by going into these countries and dropping bombs and spending loads of money on war because they got it back again and everything's rosy afterwards. It's a bit cynical, but it's exactly what's playing out. So how can you learn from this? Well, like I say, stick to your plan. Stick to your, don't buy in now. Wait a week. Wait for that 10% drop. Then get your irons. Then get your Nebiuses at your $70 and your $32. Get your Nvidias at below, it's at 177 now. So if you wait a week, you're probably getting Nvidia for like 170. And that's after they've just smashed earnings and projected to increase by 80% in the next quarter. To make 80 odd billion in one quarter is fantastic. And yet their stock dived because people pressing buttons behind closed doors decided it should. That's fine. Use that as an opportunity. Go and get your Nvidias. Ignore the noise, ignore the headlines, ignore the war. Get your Nvidia at a cheap price, and when it gets back to 190, you sell, sit back, and you're so relaxed because it's all part of your plan. So I'm not quite sure what rule we're up to now, but yeah. That all makes clear sense. It's so obvious it hurts. So going forward, I'm going to keep the Amazon because I hit the 200-day moving average. Yes, I could sell at 210 and make a bit of profit and then not kick myself when it goes back down to 197. But who cares if you buy in at 197 and it goes back down to 197? That's kind of the nature of it. It will hit 250 at some point, and I will sell, and I will have made money, and it's risk-free because I stuck to my plan. So that's it. I don't think there's anything else, to be honest. In the last video I rambled a lot more because I didn't really have a plan about what I wanted to say. This is the second time I've actually recorded it, so I've cut through a lot of the noise. But yeah, have those rules. Have a very small watch list, relevant watch list to the way you want to play your game. I want one Mag 7 company at a 200-day moving average. Doesn't matter which one, that's what I've learned. You could get bloody Tesla. You get Microsoft. Whichever one makes you feel all clever for picking the right one. They're all going to do the same thing. They're going to react badly to war. They're going to go down to their 200-day moving average. You're going to buy. And then you're going to wait 2 months while it goes sideways, and when it goes up 20 to 30%, you're a genius for picking that stock. But what you'll find if you look across the board is all the Mag 7s are doing the same thing. Maybe to different degrees, but they're all doing the same thing. I picked Amazon. Picked Amazon because it's just invested $200 billion in AI. Smart move? Who knows? But if it doesn't work, they'll put that money somewhere else, and they'll just change direction. They've got the money to do that. They can ride out instability and bad news headlines. They're too big not to. They're too big to fail. So pick any of them. Wait for the 200-day moving average, stick a few grand in, sit back and wait and relax. So there you go. Do that. And then have a few AI infrastructure plays. Have your irons and your Nebiuses, but don't pay stupid prices for them. Don't pay above 33 maybe for iron, and don't pay above maybe 73 for Nebius. Even though it's at 100 now, that sounds crazy discount. It's so volatile, it's likely to happen again. And if it doesn't, well, you're not invested in it, you're just watching it. So you can just keep watching it until it does. There's no pressure if your money isn't in. And if your money's somewhere safe, like a big Mag 7 that's hit its 200-day moving average, and then one of these Nebiuses or whatever does drop down to those targets, you can move it. You can go out your Mag 7 for a bit. You can sell that little bit of profit you made, and you can move it into the slightly riskier one that you know will bounce back. And while we're on the topic of heavily beaten down, misunderstood stocks, SoFi's on that list, guys. But this is a dangerous one again. If you'd bought in at 21 thinking, gosh, this stock was at 33 a while ago, 21's a bargain. Well, the next week it was at 19. And if you bought in at 19 thinking you found the bottom, well, in actual fact, it went down to 17, which is about where it is now, and maybe next week 16 or 15 or 14. You just don't know, wait there. Sorry, bit of beeping in the background. So like I was saying, you don't know where the bottom is. So how'd you find out where the bottom is? Well, I found out where the bottom was on Amazon because when it hit 197, I didn't buy it. I just watched it. It went from 197 to 200 to 204, back to 200 to 197, and it did it like 4 times in a week, and I didn't buy till the end of that week. The market sucked. It was all red. The news was bad. Everyone was selling. But Amazon could not break below that 197. So that's a bottom to me. So wait for a double bottom or a triple bottom or whatever it is that makes you feel confident. If you haven't got a lot of money and you want to put it all in somewhere, watch a triple bottom, watch a double bottom. Wait for SoFi to hit 16.5 and bounce up, and then hit 16.5 again and bounce up. The problem is people feel like FOMO. They feel like they're going to miss out, right? You're not going to miss out because there's other stocks to look at if it doesn't work out on that one. So, my advice, SoFi 16.5 next week. And then it go up, and then it hits 16.5 again, and then it goes up. But it doesn't go below that, and it hits it a couple of times. Then you can feel quite confident that you've got the bottom. Then you can put whatever thousands you want in and watch it go up over the next 6 to 12 months. That's how I would find the bottom. So yeah, don't feel like if it goes really low, but that is the bottom. Wait. When you feel it's the bottom, wait a week. See if it hits it a few more times, because if it doesn't and it goes below, you were wrong. If it goes up by a bunch of dollars and you missed out, so be it. Look for another one. Look for an Nebius. Look for an iron. Look for another one of those where you're waiting for a double bottom to confirm that it wants to break through down lower, but it can't because institutional investment is too intense to let it. So that's how you find the bottom. So that's probably rule 5. Find the bottom. How do you do it? Well, just told you. And I'll be doing that. So next 6 to 12 months, there's no way I'm losing money. I've just got to do exactly what I've just told you in those 4 rules. I've given you 20 minutes of my time. I've spent 5 months learning these things. It's free information. You can take it or leave it. Always do your own research, guys. Don't just think because I've said something, guy in a hood, that it's fact. Try it. Try it small, and if it works, go bigger. Have your own thesis. Try things out. Learn from them yourself. Don't go big early. Go big later. Have success, then continue with that success and grow that success. Don't just throw it all in and hope you get lucky, because that's a good way to lose lots of money. I don't think I'm going to add anything else now. A quick 20-minute video giving you all my wealth of knowledge. That's a bit sad, isn't it? But ignore the noise. Yeah? Focus on your plan. Have your stocks that you're interested in, that you have learned about, because there's no point just picking any stocks. You do want good solid foundations and profit margins and growth. And that's important, but it's not the be-all and end-all. What's so important is that it is a good, successful business with the right people in place that you believe in, and you get in at the bottom, which means it has to hit that level more than once or twice to show you that is the bottom, and then you go in strong. There you go. Right guys, I'll leave it there. Thanks for watching Shay'S Stocks. If you have any stocks you want me to look at, put in the comments below. If you prefer this to my AI videos, then give it a few likes and comments and, you know, subscriptions or whatever, and I'll do more of these. If you like the AI content and this doesn't get much attention, then I'll go back to the AI content. But I like both. I like doing this. I can just spin off what's in my mind and, you know, hopefully educate in the process, because I have learned a lot. And it does work and will work and it'll continue to work. And I hope you guys come on the ride with me, because it'd be nice if you guys made some money too. Okay guys, catch you later. Enjoy your weekend. I got my nice cup of tea. Bye for now guys.